Hello, and welcome to Beyond the Deal, where we discuss business, entrepreneurship, and commercial real estate. My name is Lacey Labs, and I'm here with my co-host, Laura Martin. In today's episode, we interview Zane Schartz, founder and president of Freedom Commercial Real Estate, a private equity firm. Zane began Freedom Commercial with a vision of creating truly passive income for investors. He does so with a strategic approach to investing with specific types of properties with certain qualified tenants. His mission in life is to create passive income through a nonprofit private equity firm focused on funding Christian world missions. Tune into this episode to hear more about Zane's journey, the commercial real estate and investment experience that he shares, and what advice he would give to investors looking to start investing through private equity. Zane Schartz, welcome to Beyond the Deal. It's great to have you with us this morning.
Thanks for having me. Excited to chat.
Yeah, absolutely.
Welcome.
So just tell us a little bit about yourself and your background and kind of how you landed where you are today.
Yeah. So born and raised in Dallas. I grew up playing hockey. That was a big part of my life. Ended up playing in college at Liberty University and then playing professionally after in North America and Europe. So that was a really fun experience. But I knew that I wasn't good enough to play in the NHL. So I always knew that I need to have a kind of backup plan. And that backup plan was real estate. So throughout college, I did some internships in different parts of real estate. I did a development internship, a brokerage internship, and a private equity group internship. Ended up working for that private equity firm for about 6 years and grew a ton there, learned a lot. I had a good opportunity to learn from a good mentor, and left that company about 2 years ago and started my own firm called Freedom Commercial Real Estate. And the name Freedom comes from two things. One, my faith is the most important thing about me. So I think that true freedom only comes through freedom in Jesus Christ and faith in Jesus Christ. And then secondly, we want to help investors on their journey towards financial freedom. So everything that we buy is cash flowing from day one. So we're a very cash flow heavy business, and we're building real estate investment offerings for investors to have that passive income to get to that financial freedom. So that's kind of a little bit about who I am and how I got here.
Hey, Liberty has that Freedom Tower too.
Yeah, Freedom Tower. It's beautiful.
That's what came to mind when you said that.
Yeah, it's Liberty's campus is amazing. And my time at Liberty was a big shift in my life.
Mm-hmm. Yeah.
So I'm curious, Zane, as you kind of started working in this field and made the shift and had those early experiences, what things drew you in? What things sort of shaped and formed your direction? And what kind of gave you passion and the vision that you have for doing what you're doing today?
I think the biggest thing, well, I'll say two things. I think after finishing up my pro hockey career, I had two directions I could have gone into. One of them, I kind of wanted to go into full-time ministry, work at a church or be a missionary. And then the other one was for full-time business, go into real estate or corporate. And through a lot of prayer and just lots of doors closing, it was pretty clear that real estate was where I was supposed to go. And I just wanted to be faithful and do what I felt like I was being led to do. So real estate, I think, allows me the opportunity to use the gifts that I've been given and help other people make money. So, I'm really passionate about ministry and funding ministries. So real ministry takes real money. And in order for people to share about the best news ever that changed my life, real money is required. So if I can help people make more money and use that money to do good things, whether it be helping their kids go to college or supporting missionaries or being generous to whatever cause they want to be generous to, that's what drives me, is allowing people the ability to use passive income and cash flow to do the things that they're most passionate about. And for me, that's one thing. And for somebody else, that might be something different. Mm-hmm. So that's what I love to do.
Love it. And I know you have a lot of kind of mission that's driving you, and we're going to come back to that and circle back around. But for now, I'm curious if we can unpack just a little bit. this process for you of learning and going into this? Because it seems like when I hear you talk about it, it sounds so easy. Just private equity, we just do this thing and it just works. It's like, I know this is a lot harder than Zane makes it look. So what would you say have been the formative things behind how you've structured your business to be really successful? I mean, you're 2 years in. I think I've heard you say that you have over 70 properties and over 400 investors in 2 years of time. So what would you say are the key things that have made you successful? And what have been some of the biggest challenges and how have you learned from them?
Yeah, so I'd say a big part of my business success has come from working at that private equity group for those 6 years. And I was the third employee there. And we grew to about 20 plus employees at the time I left. And we grew from $100 million of assets to $750 million. So being part of that growth was a huge blessing as a mid to low 20-year-old man up to a late 20-year-old man. So very formative years in terms of my business acumen. And then also I had the opportunity in that business to kind of learn by doing. I was second in command there and had chief investment officer there. I kind of grew into that role and just had the opportunity to learn from my mistakes, which isn't the best way to do it, but it's a great way to learn. And thankfully I had a good team in place to help me around that. So I think having that opportunity at such a young age was something that I don't take for granted. I know that most people in their mid to low 20s are not the chief investment officer of a $750 million AUM company. So I learned a ton, and I learned kind of what to do, what not to do, how to do something, how not to do it. So that's what gave me the opportunity to leave and go do it myself. So a lot of investors followed me. A lot of investors kind of knew my track record of success. And a big thing is just trust. A lot of investors trusted me. And that's why they followed me. So trust is a big thing. And I think trust comes through how I live my life. I want to live things and do them the right way with high integrity and just be different, be set apart in a way that's different from the world. And I think people see that, and it's paid off from a business perspective. But that's just who I am, and I don't change who I am for that. It just kind of, it's what I want to do. So long-winded answer, but I think I learned a ton in those 6 years, and through my internships, and through just self-education of podcasts, reading books, and then implementing it into practice. So that's how we got here.
Awesome.
Where are the majority of your properties? Are they in the Dallas or Texas area?
So we're in 20 different states currently, mostly in the Sun Belt region. All of our properties are east of Texas because we're based in Dallas. But yeah, the properties we buy are all double net and triple net leases. So the location is less important than if we were buying multifamily properties and being in landlord friendly states versus non-landlord friendly states. So every property we buy is backed by a publicly traded high credit investment grade tenant like Starbucks, Dollar General, AutoZone. So from a landlord standpoint, the structure of the leases doesn't really change. We're not responsible for the taxes. We're not responsible for the insurance. So it's less important than if we were in an operational business of multifamily or office or, single family residential. So that allows us to kind of have freedom on picking spots. But our location, the locations that we focus on are the Sun Belt because those are high growing markets. And I know you guys are in Pennsylvania. We haven't bought any in Pennsylvania yet, but not opposed to it. Could be a good place to grow, and I just don't know enough about it. So could be a great area for growth.
How are you typically finding your properties? Are you searching, or people contacting you, or both? Combination of both?
Combination of both. Having done this now for about 8 years and closing on 70 plus deals, I have a pretty good track record with a lot of brokers across the country of performing. And as y'all know, brokers love to deal with people who do what they say and say what they do, and get deals closed. So I have probably 100 to 200 deals a week across my desk that are a blend of off-market deals, on-market deals, but brokers all over the country want to do deals with me because they know that I'm legit, and they know that I'm going to close on a deal, and they know that we are going to be able to close on it. So very good track record. That's kind of one of our competitive advantages is we get some deals that most people don't have access to. So as an investor, you're getting access to deals that you wouldn't have if you went with yourself or went with another investment group because we have the track record and we've performed.
I'm interested in like the structure because what comes first? Do you have the investors or the asset? And, what is it required to be an investor? And are you doing all cash? Are you financing? Just kind of the whole picture.
Yeah. So kind of the structure that we run is it's a fund, and investors invest into the fund, and then that fund goes and acquires 10 to 20 different properties across the country. So investors get the diversification across different industries, different lease terms, different tenants, and different geographic locations. So it's very diversified for an investor. And then the properties that we look to add to the fund are only single tenant net lease investment grade tenants. So we're not buying retail centers. We're not buying shopping centers. We're not collecting rent from donut shops, franchisees, mom and pop nail salons. Everything we have, all the leases we have are backed by multi-billion-dollar publicly traded high credit tenants. So that's a great way to lower risk to investors, and it allows them access to a fund as opposed to a one-off property. So it really lowers their risk. And then kind of as the equity comes in, we go and deploy the equity and acquire assets. So it's an ongoing kind of rolling fund of 12 to 18 months. And over those 12 to 18 months, we're adding properties to the fund. So for example, the fund that we're currently raising for, we have 8 properties in the fund and our 9th under contract to close. And then we'll probably get the 10th under contract to close in the next few weeks. So kind of just rolling as the money comes in, we deploy it. We try to buy one property every 4 to 6 weeks. And that adds diversification for investors. And then since these tenants are so high credit and so stable, they pay monthly rent like clockwork. So with that, we're able to do monthly distributions to investors. And that's something that every investor wants, is money in their bank account every single month, 100% passive, making money sitting on the beach. So that's what we offer. And then you asked, from a debt standpoint, we are using debt on every deal. And we're typically in the 40 to 60% leverage range, so very conservative from a debt standpoint. And that just allows our dollar to go further. But if you think of these deals and the high credit tenants that we're working with, lenders love these deals. They love to lend on them, and they're clawing to get these deals, especially from an operator like us who runs them as a fund. So, we get multiple lenders to bid on a deal, and we typically get below market terms for our investors. So that is another way that we have a competitive advantage, is we have a lot of great relationships with lenders who give us really good terms for cash flow. So long-winded answer, but
it's interesting.
It's a cool thing to do. And I could talk about it for hours.
Yeah.
So what are the minimum qualifications for someone who wants to become an investor? What does that look like?
So we take accredited investors, which means you have to have a $200,000 annual income if you're single, or 300,000 combined household income, or you have to have a net worth of over $1 million. And then our minimum investment is $100,000. And, with that 100,000, you get access and ownership to every property in the fund. So I don't know of any other investment where you can have $100K invested and have ownership across 10 to 20 different investment grade, high quality credit tenants. So it's a very low barrier of entry kind of on the grand scheme of things. Obviously $100,000 isn't chump change to anybody, but the access that you're getting to that quality of asset that we are providing is we think a fair number to be at.
And then are people committing for a certain number of years, or what happens if you have to get out of the fund for whatever reason?
Yeah, so they're committing to the duration of the fund, and our kind of life cycles 3 to 4 years. And we're looking to hit about a 20% annual return in that time and about a 7% current cash on cash. So that means if you put in $100,000, you'd get about $7,000 a year distributed on a monthly basis. So that plus another, 14 or so percent between appreciation and equity growth. But in terms of commitment, if somebody needs to get out there is liquidity in that they can sell their shares to other investors within the fund. So if you put in 100K and you're like, hey, my son's going to college and their college fund went to zero. We need to take out our money and invest it into their college. We would then offer your shares to the other investors in the fund, and that's the liquidity aspect that we provide. Yeah.
Yeah. Awesome. That is interesting. I mean, I don't know that I'm familiar with another fund like that.
I've seen lots of multifamily ones, a ton of them, shopping center ones, but I've never seen a private equity firm that does what Zane's doing, which is why it works, right?
Yeah.
You found a niche.
I mean, it's really good. I mean, there's some publicly traded REITs that do exactly what we do. But when you buy into a stock or a REIT, you're subject to the overall macroeconomic conditions, and stock market goes up and down. There's fluctuations. Their dividend is lower than ours. You can't take advantage of the depreciation. We do cost segregation studies on every property, which allows investors to receive pass-through depreciation, which shelters their income as well. So, we're hitting all buckets of a strong real estate investment, from cash flow, appreciation, depreciation, and diversification. So we're hitting everything that you can. And, back to your question of liquidity and investors needing to get out, we've never had an investor leave our funds for just not being happy. In fact, we actually have over 75% reinvest rate from our investors. So 3 out of 4 of our investors who have invested with us once have invested again. So we're doing something right. And, of those 25% that haven't reinvested, that doesn't mean that they don't like it. They just might not have the money to do it. So
or be retiring or whatever. Just cashing out.
So, I like to think we have a really good thing going. I'm not naive enough to say that we're the best at what we do and the best in the world, but I like to think that we're close. And, a big part of it too is just investing in somebody that and trust and can hop on a call with and have a conversation with. With those publicly traded REITs, you can't talk to the person who's buying the deals, picking the deals. Like doing a private equity group, you have access to the people making the decisions, which is something that should be considered as well.
Mm-hmm. And they're cash flowing and they're papering because you're putting so much cash down and getting better interest rates than somebody would just walk in the door could get from a bank.
Better interest rates and better cap rates because of our ability to close. So, we get a discount on cap rate too, because if a broker who has done a deal with us can go to a seller and say, hey, we know that they can perform, we know that they will close on this deal. Surety of closing is something that every seller wants. So, if the deal is listed for $1 million and there's 2 offers on the deal, one's at $1 million and we're at $950, the broker might advise them to take the $950 offer that has a higher surety of closing instead of the $1 million offer that it's their first time buying. So not only are we getting below market debt, but we're getting below market cap rates as well. So it allows our spread to be higher and allows us to cash flow. In today's market, it's really hard to hit that 7% rate with the spreads between cap rates and interest rates. But every hundredth of a basis point counts when you're trying to hit that spread.
Mm-hmm.
So these funds, you said 3 to 4 years. So can anybody invest with you at any point, or do you kind of have like open investment times and then closed ones, or do you have like funds that are always open so you have multiple? Like how does that part work?
So we do about a fund every 12 to 18 months. So the fund that we're currently raising for will close at some point in 2025, probably in Q4. At some point, and then we'll probably start another one in 2026 and go from there. But there are horizons on funding that investment. But once you're in that investment, you're in it for the next 3 to 4 years, and then we'll look to roll that fund up into one portfolio and then sell it to a private equity group or a publicly traded REIT or an insurance fund or an endowment, or basically some type of institutional buyer who wants to buy 15 hard assets that are cash flowing by rent paid for by investment grade tenants. So that's kind of our exit strategy, is roll it up and sell it to one of these big publicly traded REITs who have 5,000-10,000 of these. And then we just add our 15 to 20 to them, all investment grade, to strengthen their portfolio. We do all the hard work for them by finding the best properties that we can by extending the leases and improving the value, and then sell it to them, and then go do it again, rinse and repeat over and over again. And then hopefully at some point we might be that group that owns 1,000, 2,000, 3,000.
Yeah. Okay.
Are you looking mostly at new construction or,
So we kind of look for everything. We buy new builds, we buy properties that are 20 years old, and everything in between. And, across those, let's say 15 properties that might be in a fund, we're looking to blend three things. We're looking to blend the best location, the highest credit tenant that we can, and then the best yield that we can. But blending those three things is a balance. So one property might be a higher credit tenant and a little bit lower yield, property number 1, but property number 13 might be a little bit lower credit tenant and a higher yield. So blending those all across, the fund is what, as an investor, you get the benefit of diversification, 15 different streams of revenue, different locations. So if we can match a good blend of those while still getting the yield that we're looking to hit, that's what we do. But for example, like we're buying a new build Starbucks with 10 years left on the lease. We're buying it directly from the developer next month. And then we bought last month, in April, we bought a 20 plus year old O'Reilly Auto Parts at an 8.3 cap. So it's like, and it had 2 years left on the lease, and we've already talked to O'Reilly about doing a lease extension to increase the value. So, everything in between that is kind of what we do. Our weighted average cap rate is at 8%. Our weighted average lease term is 6 years. So, we're not buying the 20-year 5 cap deals, and we're not buying the 2-year 10 cap deals.
Mm-hmm.
We're kind of buying, unless we will buy the 2-year 10 cap deal if we have a good story in terms of lease renewal.
Yeah,
but
mostly
that's kind of how we do it.
Even in our market, what I'm seeing is those cap rates that are like 5% for single net tenant investments, and they don't make a lot of sense. So that's interesting.
Yeah, those 5 cap deals, call it like Chipotle or a new build Starbucks in a hot market might be a 5 to 5.5.
Mm-hmm.
But it wouldn't make sense if you put debt on it. Those would be deals that you'd have to pay cash for or very, very low leverage.
Yeah.
Right.
What's your lead time from signed agreement of sale to your closing and with your due diligence and everything?
Typically 45 days. I mean, we have a really good lenders that work with us and we've done deals with. So they know our process. We know their process. We work with the title company that we've done 60, 50 plus transactions with. When we can pick our title company, we pick them.
Yeah.
And
so that's a quick close.
Because of that. What's that?
That's a quick close.
Yeah. We're
Sellers
typically
would like
45
that.
days.
Yeah.
Yeah. And that's another reason why brokers like to work with us. They know that they're going to get it done fast. So every deal is different. Some deals you might run into some type of headwind, but I don't think we've really ever closed on one past 60 days. I'm a big guy, and let's push to get it closed as fast as possible. Once we get the third party reports, let's get it done and let's get it closed. And I think that's why we've had the success that we've had in terms of getting the off market deals, getting the best debt. I wanted to create basically the gold standard all around for investors to start. But if you kind of look behind the curtain, how do you get the best offering to investors? And that's by having the best debt, having the best deals, having the best, process in place. And that's what we're trying to build, and always refining it to be as good as possible.
So interesting. Yeah.
Mm-hmm. So you have this company obviously doing well, successful. What are you excited about for the future? And what are you kind of your vision for your business as you grow it and fully live into this step of your life?
Yeah. My heart behind what I do is to help people ultimately. And my life goal is to give away $1 billion with a B to fund Christian missionaries around the world. And I want to use real estate investing as that vehicle. And I think that, having the access to capital will come more, but I want to use my understanding of real estate to tell people about Jesus, to tell people about the hope and truth that changed my life. And I want the world to have that same hope and truth that I have. So using kind of the future, I think will look like continuing to do what I do at a for-profit structure for probably the next 5 or 10 years, and then turning it into a not-for-profit fund, endowment, charitable fund type deal where investors can donate to a nonprofit, and then that nonprofit will go and acquire properties that cash flow from day one and are backed by high credit tenants and doing exactly what we're doing. But every penny that we make will go to charitable work of funding ministries and Christian missionaries around the world is what I want to focus on, is Christian missionaries. And I think it's just that will allow a donor's dollar to go further, which is something that I think is really cool. And like I said, real ministry takes real money. And going to Liberty, which is a Christian university, I met a lot of missionaries who had a hard time raising money. And, even if it was a short-term mission trip for $5,000 or a full-time missionary for $60,000 a year, it's hard to raise money. And especially when that's not your expertise. And, everybody comes from different upbringings and different families of origin. So I think it should never be, money should never be a reason that somebody can't go out and share the gospel and tell people about Jesus. So that's kind of my heart behind what the future looks like. But for now, we'll keep helping people by making them money, and hopefully the money that we're making them, they're doing good with that on whatever level that they want to do that good with. And that's our heart.
Mm-hmm. Love that vision.
Yeah.
Love it very much. In that, so I know you're not there yet. You haven't established this nonprofit, and this is a future goal. I'm sure you're going to do it, Zane. I'm like, okay, he's the real deal. He's going to do it. Do you have any kind of vision for what that's going to look like? I mean, I know it's in the future, so it's okay if you're like, hey, we'll see where it goes. But
of course I do. I'm a dreamer. It would look like a place where missionaries can come to from all over the world, and we would never have to tell anybody no. I would love to be that big that a missionary could say, hey, I'm raising $50,000 and I want to go to Africa, or I want to go to Asia, or I want to go to Mexico, or I want to go to California. And I would love for us to be a well that is being replenished over and over again by cash flow from real estate, backed by high credit tenants, but also that can be filling up buckets around the world to tell people about Jesus. So, it's very possible. It's very doable. And it ultimately comes down to if God wants that, it'll happen. But, from a real estate standpoint, there's a lot of companies that are making that kind of money and driving that kind of revenue. And there's a lot of people who want to do good in this world. And there's a lot of Christians who want to support this type of mission. So kind of blending all those together is what I want to do. But yeah, I'd love to be a place where people come and they can ask for money and we don't have to tell them no. And
do you have thoughts on how you would qualify your giving and your missionaries, or, any specific areas of the world or projects that you have a big heart for?
Yes, absolutely. Japan is a big place that I think there's a huge need for the good news of Jesus to be shared. Japan has almost 200 million people, and less than 1% of those people even claim to be Christian, and less than half of that percent attends church regularly. So attending church doesn't make you a Christian. Just want to make that clear. But, that is an indicator. So, there is a very small percentage of people in Japan that know Jesus and have ever even heard the truth of Jesus. So I think that and it's not persecuted there. Christianity is not persecuted. It's totally legal to share the gospel. And, I've heard from a lot of missionaries over there that just tell me how dark it is in terms of like people just live a life of fear and uncertainty. And it's not persecuted Christianity. So it just makes a lot of sense to me from like a analytical statistics standpoint. And just whenever I think of a place that makes sense, or whenever I hear of missionaries going to Japan, I just think that God's placed that on my heart. So that might be an area that I focus on.
Love it. Love it.
Yeah. But I mean, in the end, like, we live in a broken world. We live in a fallen, broken, sinful world that I don't think there's anybody that would say that this world is not broken. And the whole world needs Jesus. So sending missionaries all over the world is what I want to do. Focusing on one area could be, more consolidated or focused and might have an impact greater. But if somebody were to come to us and say, hey, we want to go to Cambodia, it's like, I hope at some point we can say, great. I don't want to tell people no.
Yeah.
And I kind of have that right now of like, whenever I hear from a missionary, I kind of have a soft spot. I'm a sucker for a missionary, but I think the Lord loves a cheerful giver, and I want to be that cheerful giver and use the resources and understanding of business to do that.
Mm-hmm. Love it. Yeah. Well, I'm excited to see what happens in the future and to have you back on in a couple of years telling us about how you've got this going and it's underway.
Hey, I hope.
Yeah.
I hope it happens that fast, and it definitely can. And, it might start on a small scale and grow from there. But yeah, I mean, it's definitely going to happen. It's not if, it's when. And, I'm growing every year in my understanding of business and how to do this. So as I refine that, that'll only make that, the charitable fund or nonprofit more successful in the future. But that is the end goal. And I'm not in this to make money for myself. I'm not motivated by money. It's really unimportant to me. And I am very goal oriented. I'm very driven. I want to win. That's my competitive side of being an athlete. I want to build the best portfolio I possibly can for investors. Like every variable I can improve on, I want to be the best at. So if I can do that for profit for investors today, and then in the future, not for profit for missionaries tomorrow, that's what I want to do. And, I'm always learning, always improving. And the more I improve, the better. The more money we'll be able to give away to investors, or the more money we'll be able to give to investors today and give away in the future.
Mm-hmm. Yeah, I'm sure in the Lord's timing, it will happen. So, yeah.
Exactly.
Yeah.
So we have 2 closer questions that I'd love to do with you here as we wrap up, Zane. First one is, with these years of experience that you have in business, what advice would you give to young entrepreneurs looking to get started in running a business or investing in private equity or anything that's kind of around people looking to do the things that you've done, or something that even touches it? What advice would you give to people hungry for business, hungry to see business fund missions, hungry to see money work in the world in a different way, and following your path a little bit?
Yeah, I think if I could go to my younger self, the advice I'd give to my younger self would be, and to any person younger, I'd say just learn as much as you can. Literally be a sponge, read books, listen to podcasts, get internships, join the groups, go to the meetups, go to as many things as you can learn. And, Warren Buffett said, the more you learn, the more you earn. And it's not about money, but you put in the work to learn something, the success will follow. If you put in the work for anything, the success will follow. So I'm a big believer on just learn as much as you can, educate as much as you can, get jobs that will pay you to learn, be in situations where you can learn as much as possible and grow from there, and then start implementing it. And a lot of it too is you can learn all day, but if you don't start doing, no matter what the level is, you could start at 0, but you can't get to 100 without starting. So I'd say learn as much as you can, and then get in the game as early as you can and start. And if you're young and you have, even if you're not young, if you're starting, you have the ability to use time over months, years, decades to grow. So just learn as much as you can and get in the game pretty much.
Yeah. Love it. So if you could go back, this is kind of be a play on the kind of how you answered that question with the going back to your younger self question. So if you could go back and start your career over with from the beginning, but keep all the knowledge and experience you have. So go back, be younger again, start over, but you get to have this knowledge and experience. What is something you would do differently?
Yeah. 100%. I would start with investing in cash flow from day one. When I was younger, and I think a lot of investors today, no matter what age they are, they get distracted by the high equity multiples, the high projected returns, the high appreciation plays and potential. I would say buy a strong asset or invest in strong assets that cash flow from day one, because if you invest in a strong cash flowing asset on a good piece of real estate, it's going to appreciate in value organically. So I would focus less on appreciation and focus more on strong real estate underlying value that cash flows, because value of real estate will only go up if it's on a good piece of land and if it's a good location. So, when I was younger, I might have focused more on yield in terms of cash flow. And today I'm focused more on the piece of real estate and the underlying location in real estate. So that would be the advice. And I would start from day one buying deals that cash flow and put money in my pocket every single month, and then snowball that over and over and over again. And that's what I've started to implement over the past few years. Is my investment thesis is 100% cash flow and puts money in my pocket the day I buy it. And that's what we're doing for investors. And they get distributions. I get distributions like clockwork every single month. That's what everybody wants, instead of the value add multifamily play or the ground up development that have a ton of variables that are out of your control. Buy something that cash flows, invest in cash flow, learn cash flow. And cash flow is the end goal to financial freedom. If you have $1,000 a month, $5,000 a month, tens of thousands of dollars a month coming cash flow by just breathing, if you're making money while you sleep, making money sitting on the beach, that's financial freedom. And that gives you the ability to live life and do whatever you want. If you don't have to work for your money and it just comes to you, that's financial freedom. And that's what we're trying to build for investors. And that's what we are building for them. That's what I would tell myself younger. And that's what I'm telling myself today. So we'll see if in 10 years I'm speaking the same thing, but I think I will be, because I talk to a lot of investors in their 50s and 60s who are preparing for retirement. And they're like, I just don't have any cash flow. My income is about to stop. I'm retiring and I need cash flow to pay my bills. And appreciation doesn't pay your bills. A value of a property increasing from $1 million to 1.5 million isn't going to pay your monthly mortgage. You need cash flow. So I'm having that conversation almost on a daily basis with investors who are looking for cash flow. So cash flow, location.
Yeah.
Strong real estate is what I would say.
Yeah. Awesome. Love it.
Yeah.
Well, Zane, thank you so much for taking your time to be here with us as a guest today. We really, really appreciate your insights. It's definitely been a unique topic for us on this. And I think it's got a lot of value. And we also just love your heart. So thanks for sharing your story and your heart, and much success to you, friend.
Yeah. Thank you. Thanks, Zane. Yeah. Take care.
Thanks for having me on. I love talking about it. So thank you.
That was Zane Schartz sharing his insights on private equity investing. For more information on Zane, Freedom Commercial, or to learn more about SB and Lattice, click the links in the show notes. Thanks for listening to Beyond the Deal.